All right. Soyb. Soyb. What is that? Arca. I know nothing. It's, oh my god. Teucrium soybean fun. Whatever that is. And I got an alert. And a lot of my alerts, I've set them on the charts with my classical noise reduced trading framework, but it does not matter because I've noticed that trade setups, key points, key resistance, support, no matter what you look at, Fibonacci, classical charting, whatever, there's tend to be some overlap. So if ever I get a trigger on on an alert that I set with, let's say, a monthly candle chart. Well, the time frame different. That's gonna alter it a little bit, but the zone of area or support, they're similar. And either case, if it was just an alert that gets me back into the chart to see how the candles have been added, how the chart morphed, what's the new pattern, etc., just gets me back to it, and then no matter what I do, I make sure I reset some alerts for either the upward scenario or the downward scenario before clicking the X on top and closing my session. So that's how I keep track of all my trades. And every time I have a follower or somebody asks me for a new sticker or a new ticker, it comes to my attention, I do the same thing. And eventually I have a huge repertoire of stocks, which are all my alerts are set, and that was done over time. And this faster you start doing that, going through charts, putting alerts, and even if they're gross and they're not super precise, over time, you got the alert, you got triggered. Okay, now this is the pattern. It's more refined, and etc. Until you have some meaningful lure alerts. All right, still doing Secretwars, Stan Weinstein, and I might have mentioned it many podcasts ago, and maybe in the start of my Secretwars, that I did not have the Mansfield indicator that Stan uses in his book. And he's a trader from Stage Analysis. He brought that to my attention, and he's right. I'm using the RSI, but it's not what Stan had in mind. So I usually say triple confirmation. I have the break. I have let's do it here. Let's say I have a breakdown below 30-week moving average, below a support line with a high volume, and then I draw my line. I say, look, the RSI is going over the halfway point from top to bottom. Well, it's not exactly what's that sign in mind. So maybe I should, until I get myself a Mansfield indicator, and I'm checking out with interactive brokers. I know they don't have it by default. Maybe there's a custom API or a custom indicator I could import. And if I could do that, I'm definitely going to add it in there. Am I still going to use the RSI? Right now, I am. It still gives me an indication of the strength of the stock for itself, not compared to index, as it was the index it resides in, as it was the Mansfield indicator was intended for. But it still gives me I like seeing, it gives me an idea of the momentum of the stock, of where it's going. So if it goes in the opposite direction, let's say the RSI is going down, but I think I'm playing a stage 2 going up, I'm going to say, whoa, okay, something's wrong there. So imagine that. I think I'm having already pretty good success identifying good stage 2s and 4s using that. So I can't even imagine with the Mansfield the percentage of good stage 2s and stage 4s there that don't whipsaw back or that don't totally fail. So I'm very excited about that prospect. So what am I going to do? I'm going to call it the Stan Weinstein double confirmation, and I'll just say that the RSI is my personal touch. And yeah, I'll get to soybean, but I just that's what I've noticed. Like over the years, you read books. I read Stan Weinstein's and I read Peter Brandt's, and other mentors or people in the field that you read. It could be John Bollinger or whatever. And eventually what happens is you take bits and parts. At the beginning, you might take a framework, and then you try to apply it 100%. Then you read from somebody else, and then you apply that. And eventually it becomes your own system, your own trading framework that's best fitted for your emotional profile. And that's even better because you're not these people. They did a certain way, and you got to do something that fits your profile. Like, I trended towards monthly candles in my classical trading framework because that was a setup which gave me the least work, or I could spend. I wouldn't have to check the charts every night. I'd be able to. I'd get in on the monthly closes as triggers. So essentially, I could look at charts during the week or during the days, but that'd be for personal pleasure. But at the end of it's mostly the end of the month that counts for that my trading framework. If I have a close above or below a breakout line, I do my implied measured move from the classical chart pattern or the pattern that's implying it. I set my buy to get in, my stop loss, and my profit limit, and I forget about it. So I took probably parts of a Peter Brand system or Stan Weinstein system or stuff I might have read on stockcharts.com or baby pips. I did the whole baby pip school. It's pretty awesome. Before you get into Forex there, they really cover everything down pretty well with a good sense of humor, so it's easy to absorb. And I came up with that system. So, and it fits my profile. So the more it fits your emotional profile, the more you're going to like it, the more you're going to be consistent with it, and the less chances you have of landing on emotional landmines. All right. Like right here for the Ichimoku clouds that came from Isa Trader from Stage Analysis, Stan Weinstein system, and you just add something on top of it that either takes care of a weakness that you might have in your trading, let's say you have difficulty identifying where previous support or resistance is, or what's the meaningful support resistance. Well, look, the clouds do it for you. It's visual. It's right there. And if you think it's useful for your system, use it. All right. I'm talking a lot. Okay, let's look at this beast. Okay, we had a stage 3, small stage 2, okay, stage 3, then boo, stage 4, all the way down here. So here you would have been it would have been triggered out. I don't know how this would have played out. Where's the breakdown candle here? Okay, here's the breakdown candle right there. I believe this would have been it back in the days. Right, this candle. Not a lot of volume. And I gotta know how you guys do it for the for the breakdowns. Are you really looking for that twice the average volume of the previous 4 weeks? I seem to notice that's really there on true breakdowns, the true breakdown candles. Stan talks about fear being the breakdown. Maybe I misread something where he says no, you do need the volume on breakdown candles. Either case, you would have been down here, and there's a couple of spots you could have been triggered out there. I'm not going to go through it now. I just want to focus today on... Let's reset everything. Oh, this one. Okay, Stan Weinstein. Okay, here we are. No, where's my chart? Soybean. All right, okay, here we are. I want to focus today on this beautiful stage 1, 2, 3, 4, and 1. And here is my... See, I still have the ADX here. I'm going to start looking at less and less because it really identifies, like, any value under 20, you really And the lower it goes, the more tight the formation is, the more it means you're in a stage 1 or 3. And you can see it right here. All this zone right here, that's a nice stage 3. And did you have it here? All right, here you had nice stage 1. All the way here, sideways. You see it also with the cloud. There's a lot of that's when I say it overlaps. ADX is telling you that you're in a stage 1 and in a stage 3. And the Ichimoku cloud, same thing. If the price action is below the red cloud, that means you're in a downtrend. If it's above, it means you're in a green. If you're above the green cloud, it means you're in an uptrend. So that's a way to tell if you're uptrend, downtrend. The 30-week moving average, if it's going down, you know you're in a downtrend. If it's going up, you're in an uptrend. It gets a little harder when you're zigzagging through, but if you see the decline or incline of it. And what else you have? You have the Ichimoku cloud that's there to help you. So if it's like this, you see the zone here, it goes from red to green to red to green, and it's getting smaller and smaller. That means that all the previous support and resistance along that ladder, that incline or decline ladder of all that move, it's just been evaporating. And that's another way. Just by the Ichimoku cloud, I could remove everything, and you could see the 30-week the stages there. So there are a whole bunch of ways, and when they all overlap, it's just like really, it's like should pop in your face there that, okay, this is a stage 1, this is a stage 3. And eventually, that's why I think when you start technical analysis, you have like 30,000 indicators, and I went through all of them, or a whole bunch. And eventually, you could remove a whole bunch of these indicators. And even the Ichimoku cloud, somebody's really used to identifying support, resistance, and giving value to if it's further away from the current price action, then they won't even need the clouds anymore. They'll just know. Their brain is going to be able to do it. All right. I keep diverging. All right, so here is this beautiful stage 1. And I'm going to say 1 because, okay, here I always start by drawing the support and resistance the furthest away, and then putting alerts there. And then there's more as time moves on. You always have patterns within patterns, and the closer patterns are usually the ones that you'd like to have for the takeoff, because the resistance or the support value of the further away ones is less and less valid as time moves on. And right now, the price action is above the Ichimoku cloud, the red cloud. So this is, you're above the resistance. There's no resistance above. And we're above the 30-week moving average. So right now, if we have a breakout above this 1940, let's say 1950 line, right here. So if you have any breakout here above these candles, this is a good breakout. If we get the volume here on the weekly candle, it'll be awesome. And if we get the RSI, well, not the Mansfield RSI, but just a standard RSI going above the halfway point into over the 50 territory, that'll give us a setup. I can't say A plus anymore, I guess, because it's not the Mansfield, it's not the triple confirmation for Stan, but it's good. It's a very good sign that that might be a good stage 2 for you. But then after that, you always go on the monthly and see what we're dealing with there. So on the monthly right now, I removed almost everything. My RSI, there's no clouds. I put the 10-week moving average, the 10-month moving average. Eventually that might go also. And here all we have is a chart. And remember, don't get cheated by here, right? If you move the chart up, oh, this looks like a top. It could only go down, right? Create some black space. Start imagining what could happen. And, oh, this is a bottom. Well, put it there. Who knows? Could always see both directions, and always somebody's giving you tips and recommendations. And if you see that they see both ways, that's not a weakness, that they're indecisive. They're telling you there's two possible moves, and that is totally real, and you have to be open to that. If you're not open to that, that means you're biased. You're not looking at the other direction, and it just compounds emotional and emotional landmines, and that's not good traits for a trader. You should maybe take with a grain of salt whatever they might tell you as advice. You want people who change their minds. You want it's like a scientist. Theory A is good until there's evidence that proves that it's invalid, and then you throw everything out the window. A good trader will recognize that. I'll tell you the same thing. If he's looking at the bullish scenario or the upward scenario, but it's a breakdown here, a candle, well, he changes his mind, and it's great. There's nothing wrong with that. It's even a good sign that he changes his mind. All right, so on the monthly, the real support, the real resistance is always closer, because the intra-week noise, intra-daily noise that you see on the weekly candles, daily candles, and so forth, they're in the wick, and the month close and opens is where it's at, where the market decided that's the important resistance or support level. So I lowered a little bit. So right now, that's the level we need. We need to close above 1915 for a stage 2 breakout. And if I'd be doing my classical noise reduced trading system, trading framework, this would be the target for that move right there. That small pattern. Closer, shorter, smaller patterns have more probabilities of reaching their possible targets than waiting to have, let's say, doing this one. If there'd be a few candles that would stop here, and then you have a bigger pattern, then that bigger pattern has less chances of reaching its possible target than a smaller pattern closer to the price action. So the closer you are to the price action, that pattern has a better chance of reaching its possible target than a further away, bigger pattern encompassing it. Doesn't mean it's not going to reach it, but just might have congestion along the way. You see, you might run into previous resistance, and you just might have zigzag or other consolidation patterns that you could jump off. A little bit like Stan Weinstein's continuation breakouts or continuation breakdown patterns. It's there's always steps. There's an acceleration, sideways move for consolidation, and then either price reverts or you just continue. All right. So that's it. We have to just wait just a little bit more. And I think soyb could be good for a stage 2 breakout. Right now we're at 1886. Just put the alerts, and we'll come back to this once it's ready to go. All right, guys. That's about it for today. I talked a lot. Hope it was good for you. It was good for me. All right. Ciao.